Steel just turned political, and this move could hit inflation, commodities, and your portfolio. The White House is signaling a possible rollback on tariffs tied to steel and aluminum, not the raw metals, but the products made from them: ovens, washing machines, drink cans, packaging. That sounds small. It isn't, because this is not about trade. This is about inflation. For months, tariffs pushed metal costs higher. Higher metal costs pushed appliance prices higher, packaging costs higher, food distribution higher. That fed directly into CPI. Now here's the key part. If tariffs on metal-based goods come down, input costs fall, and that puts downward pressure on goods inflation. This surprised traders. We've already seen cooler CPI, coffee prices down, beef prices down, headline inflation softer. So policymakers are pivoting from protection to affordability. And this isn't a one-off. Over the last 3 months, we've seen food tariff carve-outs, trade deals lowering duties, semiconductor tariffs with huge exemptions, pharma tariffs that never really hit. Most investors are missing this. Tariffs are becoming a political dial for inflation. Turn them up, protect industry. Turn them down, help consumers. For commodities, that changes the game. Let's talk steel first. If finished goods tariffs drop, domestic steel loses some pricing power. Demand shifts to cheaper imports. Margins compress. Not a crash, but upside gets capped. Aluminum is even more sensitive. It lives in packaging, cans, foil, food containers. Lower tariffs on aluminum-based goods means lower domestic premium. That's pressure on U.S. aluminum pricing. Now zoom out. If the government is easing tariffs to fight inflation, that tells you something about the economy. It tells you policymakers are worried about the consumer. And when policy shifts toward affordability, that is usually disinflationary. Disinflation is bullish for bonds, bullish for rate cuts, bullish for consumer stocks, but neutral to bearish for protected commodities. This is the rotation. Steel producers lose pricing power. Appliance makers gain margin. Beverage companies save on can costs. Retailers benefit from cheaper goods. Follow the margins. That's where the money is. There's also a political signal here. Even inside Trump's party, there's pushback on tariffs against allies. That means trade policy is no longer one-directional. We're entering a headline-driven tariff market. 1 week protection, next week exemptions, then partial rollbacks. That means volatility. For traders, that raises risk premiums in metals. Now here's what to watch. Number 1, is the rollback official or just talk? Number 2, do raw steel tariffs stay in place? Number 3, do we see similar carve-outs in other industrial inputs? Number 4, does CPI keep cooling? If tariffs keep getting trimmed, we get lower goods inflation, stronger consumer spending, and softer domestic metal pricing. If the policy flips back to protection, steel spikes again. This is no longer just a supply and demand story. This is policy-driven commodities. The headline sounded small. Tariffs on ovens and cans. But the signal is massive. It's about inflation. It's about margins. It's about the next move in metals. So here's the question. Are tariff rollbacks bullish for the economy or bearish for U.S. steel? Tell me in the comments.